Hey guys, Doug the Retirement Guy here. We have a new series we're starting off with. It's called Monthly Paying Dividend Funds. 45 different funds we're going to be reviewing over the next 30 days. Today we're going to do Main Street Capital Corporation Common Stock. The ticker is MAIN. Now, we've talked about this one many a times before. They show a 7.19% dividend yield. And personally, I own this one. This is a strong performer for me. Main Street Capital is a BDC. They are a company who does that mid-growth stocks, mid-growth company size. Located in Houston, Texas, they have over $8.1 million in investments. And their whole goal, they tell you straight out, is to generate income from their debt investments in the lower middle market companies and private loans. So what is a BDC? Let's explain this and its advantages. First off, high dividend yields, because BDCs are regulated investment companies. So they are and must distribute 90% of their profits to shareholders. And when they do that, that means they don't pay corporate income tax on profits before distributing them to the shareholders. This will basically give you a higher dividend yield as they promote it out. So the advantage for them is to make sure they're putting out that 90+%, so they're avoiding taxes. The other big thing BDCs are available for is open to retail investors. Okay, retail investors are you and I. We're not the big ETF funds. We're not the big corporations. Basically, a lot of funds that these guys go after, that middle market that they're loaning money to, is closed off to us. They're closed off to the retail investors. So it gives us the chance to get some of those returns and investments of those companies. Liquid, the BDCs are traded on the public exchange. They have to go through everything and they're very transparent. And then the diversity. And this is what I love is if you do your research, you will find that BDCs, some are doing like Maine here, they're doing the smaller mid caps. There's other ones that are doing larger ones. There's the ones that do the cities and governments. So there's a lot of different programs out there that you can get into with a BDC. So the question we ask is why Maine? Why is this a particular one and why do we love it? Well, first off, the 7.19% dividend that they've been paying very, very strong. But they've also, the dividend payout growth has been growing for the past 4 years. So you're constantly getting an increase in your dividend payout. Plus, the stock value has been up 5.87% over 1 year, 55% over 5 years. So this thing has a train that just continues, has its good years, bad years, but overall, they're all very positive, virtually in double digits. And of course, because we're doing a review, they are a monthly dividend payout. And with this channel, you know we like the regular cash flows because we like to get that check at the end of the month and pay our bills. Other people like to take and reinvest the potential into more stocks. So we look at this as the return of Maine for 1 year. Now we look at this as the line chart, and you can see that it's just slowly had a nice trip up the mountain all the way to its peak until we had the March Madness. And you see it did have a downward slope, regain, downward slope, regain, downward slope till it finally hit its bottom, but came back out of it fairly strong. The next one, though, is one that I've seen across the board is the April dividend or April tariffs that really messed up the stock market. And you see this thing dropped hard because people didn't know what's the tariffs going to do, what's it going to mean, where are we going to go. Positive, though, with Maine is look at this coming out. They climbed out of the basement fairly quickly. And they've been coming up and working their way through, especially when we don't know where the tariffs are going to take us next. We'll see this thing settle out probably over the next 3 months, but these guys are already on the move saying we're moving better where we want to be. When we take a look at the 1 month out, there's 6.56 gain. 6 months, 3.59 gain. Year to date, which you got to remember is January through April, is down 9.55%. 1 year, they're up 5.72, and 5 years, 99.18%. So realistically, these guys are doing what they need to do, and they're developing. Right now, I just look at this as a buying option. Buy them while they're low, while they continue to grow. We look at the 5 year, you can see the same pattern over 5 years, that they have just started at a small point and slowly grown up to where they're at today. Looking at the dividend chart, this one, I really love their dividend chart plan. I look at this, you look at this as 10 years out, up to 2020, you've seen all the little spikes that they were constantly spiking every other month, every third, that boom, 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 giving you those big dividend payouts. Then they go to 2022 where they had to readjust things. But now they're back on that standard platform where they're paying out that 25.5 cents and bumping it up to 30 cents on a fairly regular basis. So this is where we're impressed with their payouts. If you didn't have the 2022 to 23 downtrend, you would see a bigger raise in their dividends on a regular basis. So as we said, we put $10,000 into Main Street back in May of 2024. The stock price was $50.70. We had 197 shares that we were able to buy. And 12 months later, we have a stock value return of 4.43%. You add in that dividend, which we were able to only get 5.92%. So it gave us a solid return of 10.35. We look at the line chart again, everything shows exactly the same. Main Street's extremely smooth over the past 12 months. But here's the one I like right now is the average 12 months and the average 52-week runners 53.33% or dollars. Current cost is $52.95. So you're basically 3/4 of 1 percentage point below average. So there is still a slight gain of getting back to average. Now, I don't expect this to get to average. I expect it to go above average. Once it starts rolling and flowing, which we already see it starting, it's going to go above average. I expect it around that $55 range. So you got yourself about a $2 gain right off the bat, plus all the dividends. So is Maine good for a retirement account? And the answer is definitely yes. We put this as a moderate buy. A 5.92% dividend that we were able to get, I'm very impressed with. It's not something I'm going to say, hey, this is my number one runner, but this is one that just gives me a standard flow year in, year out. I can count on every month getting 25.5 cents per dividend per share and budget accordingly. The 4.43 gain is great, especially when you see a lot of stocks now that are down, and that's growing over time. So this is Doug, the retirement guy. If you like what we're doing, give us that thumbs up. We got like 40, 45, 46 more videos coming out just on monthly payers. Hit that subscribe button. Don't miss a single one of them. And if you like what we're doing, leave us a comment. If not, also leave us a comment. We're open to listening to what you have to say. Everything helps the channel grow, guys. I hope your accounts are growing. We'll see you next time.